Welcome to System Failure Signals. Imagine waking up one morning and finding out that silver is still being traded on screens. Prices are still updating every second. But when you actually try to buy physical silver, it's simply not available. No coins, no bars, no delivery dates, just a quiet message that says temporarily unavailable. That moment is not about silver anymore. That moment is about trust breaking. Because when physical silver disappears while paper prices keep trading, that's not a market issue. That's a system failure signal. And today, we're going to talk about what really happens when the US Mint and major silver dealers quietly hit the freeze button, and what it means when physical silver is gone. This is not a theory. This has already happened before, and the signs are starting to line up again. The most dangerous part is not the shortage itself, it's how quietly it happens. No emergency announcements. No headlines screaming panic. Just delays, excuses, and suddenly empty shelves. And by the time retail investors realize what's going on, the door is already closing. Before we go deeper, if you care about understanding real signals before they become headlines, take 1 second to like this video and subscribe to the channel. It tells the algorithm this content matters, and it helps System Failure Signals keep tracking the cracks forming beneath the surface of the financial system. Now let's continue. When people hear us mint silver freeze, they imagine a dramatic shutdown. That's not how it works. The US Mint doesn't say we're out of silver forever. What they say is much more subtle. They blame supply chain issues. They cite blank shortages. They mention demand exceeding expectations, but the result is always the same. Popular silver coins go unavailable. Buck orders grow. Premiums quietly explode. And retail investors are told to wait. At the same time, major online dealers start changing language on their websites. Instead of in stock, you see expected ship date unknown. Instead of guaranteed delivery, you see fine print. Some dealers stop offering certain products altogether. Others only sell at sharply higher premiums. This is not random. This is the system protecting itself by rationing access to physical metal. Here's the key thing most people miss. A physical silver shortage does not start when silver is gone. It starts when silver stops flowing freely, when delivery becomes uncertain, when promises replace metal. And this is where fear quietly enters the market. Retail buyers don't panic all at once. First they get confused, then they get frustrated. Then they start buying whatever is left, even at bad prices, because availability suddenly matters more than price. This is how shortages feed themselves. Not through hysteria, but through realization. Now zoom out for a moment. Silver is not just an investment metal. It is an industrial metal. It is used in electronics, solar panels, medical equipment, and defense systems. When physical silver tightens, it doesn't just hit coin buyers, it hits manufacturers. And when manufacturers start competing with investors for the same limited supply, the system starts choosing who gets metal and who gets paper promises. This is where paper silver becomes dangerous. Futures contracts, ETFs, unallocated accounts, all of them assume physical backing exists somewhere. But when demand for delivery spikes, the system relies on one thing above all else: most people never asking for the metal. A true physical shortage exposes that weakness. Because if too many people demand delivery at the same time, the paper market cannot deliver without revealing the mismatch. And that's when confidence cracks. This is why freezes matter. A freeze is not about silver being rare. There is silver in the world. A freeze is about silver not being available at the price and terms the system promised. That difference is everything. Historically, every major precious metal stress event followed the same pattern. First, rising premiums, then delayed deliveries, then product suspensions, then official explanations. And finally, a new normal where access is restricted and prices reset higher. Retail investors usually experience this last. Institutions move first. They secure supply quietly, off-market with long-term contracts. By the time the average buyer notices something is wrong, the cheapest and easiest silver is already gone. This is why watching the US Mint and major dealers matters more than watching spot price charts. Spot price can be managed. Availability cannot. When physical disappears while paper trades normally, it tells you which market is real. And here's the uncomfortable truth. If physical silver truly goes unavailable, it doesn't mean you missed an investment. It means the system is prioritizing stability over fairness. It means rules are being rewritten in real time. What happens next is never announced in advance. Sometimes it's export restrictions, sometimes it's allocation limits, sometimes it's price caps on official products while private market prices explode. The outcome is always confusion. This is where fear turns into action. People stop asking, is silver a good investment, and start asking, will I be able to get any at all? That psychological shift is powerful. It's also irreversible. This is why physical shortage videos spike. Not because people are greedy, but because people understand instinctively that when physical is gone, something deeper is broken. Money is supposed to be available. Assets are supposed to settle. When they don't, trust evaporates. And trust is the real currency of the financial system. Once trust breaks, everything else follows. People hoard, dealers ration, governments intervene, and prices stop reflecting value and start reflecting urgency. This channel exists to track these moments before they become obvious. System failure signals is not about hype, it's about patterns. And the pattern is clear. Every time physical silver freezes, it's a warning that stress is building elsewhere in the system. It's never just about silver, it's about debt, it's about leverage, it's about promises stacked on promises. Silver simply exposes it because it cannot be printed. As we get closer to the end of this video, ask yourself one question. If physical silver became unavailable tomorrow, would the system admit it was broken, or would it tell you everything is fine while offering you paper instead? History already answered that question. Before you leave, drop a comment below. Do you think a physical silver freeze would cause panic, or would most people not even notice until it's too late? I read the comments closely, and your perspective helps shape future breakdowns. If this video helped you understand what's really happening beneath the surface, share it with someone who still thinks shortages are impossible. Awareness spreads faster than metal. Because when physical is gone, explanations don't matter anymore. Only access does. Take care of yourself. I'll see you in the next video, where we read the system failure signals most of the world overlooks.